Greetings, market rebels. Welcome to this week's macro measure. It's going to be dated April 9th, which of course will be Sunday, but I'm recording it here on Saturday at a little after 1:30 p.m. on the East Coast. So let's get a few things taken care of, and then we can get moving into things. Here's the old trusty disclaimer from Market Rebellion, and here is our trusty intellectual property rights notice. You wouldn't mind memorizing that. All right, that's probably good. Thank you very much for that. And then we've got the plan program from last week, but I don't want to go into that. I want to go into the plan program from this week. So as many of you know, I kind of jump around with different points at different times. So it's a little bit like a stream of consciousness thing, but these are the things we're going to be concentrating on. If you want to take a snapshot, trying to get through this as quickly as I can to shorten things up. There's a lot of news I'm going to leave out this week, that a lot of which will be covered by what Ryan puts into the market outlook, market overview in the newsletter. All the newsletters that go out, and of course that probably will go out today or tomorrow as well. So just look for that, and you'll get more depth on some of the issues that are cropping up out there. But I tried to consolidate things a little bit. So what I'm going to do is stop sharing and then kind of reposition here and get this off the screen so we can talk about it. And I've got a good reminders on things set up. And then hopefully we'll be in good shape. So let me get the share started again, and that should be I'll share screen 4 for now. So okay, so where do we start? We had the prior week, we said, and I probably should bring up charts and come back to this for that. So let's do this chart right here. I think will work for that. And I'll just make sure it's taking up the full screen and then enlarge this a little bit. So we were looking at last week, we came in, this is part of the summary that with what are not bullet points, but look a lot like bullet points. So we thought there might be a brief Monday pullback. There was only a 4-day week last week. So here's Monday. And what they did was they ran it really quickly, but then there was the brief pullback. So they took it further into that overbought range or overbought status. And we had said if they had done that, right, we probably should, liquidate. And that was probably a decent move overall, because they really did get things overdone. They did recover clearly right by the end of the day, since this daily candle looks solid. But then I guess that overbought relief came in the form of what they served up for us on Tuesday and then Wednesday. Then we had this kind of curious comeback Wednesday, which was followed up by this waft algo getting turned on. About the same time they turned it on Wednesday, I feel like this algo came in and it just kept moving things. Now, there could have been 0 DTE that added to that, but it was kind of giving me that vibe of this market's not going down today. We're right in front of the big American holiday that we talk about, in front of every big American holiday. And the gang really has this proclivity for wanting to goose things into these holidays. And rarely, I'd say in my memory, do they really let them fail in a big way. And that's an undo right there. So that's kind of what we got. I think we got a lot of what we expected out of last week. And we continued to say this is really a singles and doubles market. And singles with an occasional double here or there, and using the baseball parlance, but it probably remains that way. I think kind of focusing on what happened here, I put something in Rebel Pit late in the week just to kind of note that what happened here. So let me just enlarge this to kind of show what I shared, which was, if you look at this bear market downtrend line, this is one of our bullet points. If you look at that big move off of there, and then you look at which took out, this high, took out this high, and then you look at what happened last week and how they again kind of dubiously move things back up. But again, we've seen many of these Friday reversals, Friday saves, and then you're wondering, boy, that was kind of shaky, sketchy looking. I'm not so sure about that. And then lo and behold, the next week, they just keep moving things up. But if we're trying to be objective, that's why I'm got the little Austin Powers mixed bag, baby, note in there for us this week, because you really, if you're a bull, right, and you look at a nice, strong, impulsive push like that, then you get this kind of milder pullback to this point, and then you finish the week strongly relative to where you could have finished the week. And then you add in things like, well, it did bounce to kind of right off the line to confirm that, it wasn't going to go back into the bear market mode or bear market pattern at that point. And you combine that with now all these rising SMAs. You can see that even the longer term SMAs that we keep on the daily chart are all really upsloping at this point. So there's a lot of things there: mild pullback, strong push, upsloping SMAs, taking out highs, now potentially with a higher low in place, right, relative to the last one, which is higher than this one. So you really can't, I don't think you can really say, well, no, this thing should get crushed technically. I think this is sketchy as all living daylights. I think this has been a low volume exercise in frustration, where they're able to use poorly positioned bulls, they're able to use ill-footed position folks, overly bearish stuff in terms of sentiment to just frustrate the living hell out of people. And gapping up and 3 days in a row, 3 sessions in a row like they did the prior week, and then doing this is sketchy nonsense. It can definitely draw people in, right? It can definitely draw people in, and you've got to be careful, because I've seen these sketchy things like this happen, and then they're still able to create just pure, or engineer really pure magic from it for bulls. So as much as I think it's a bunch of engineered, let's say, sleight of hand by the 3-card Monte shell game operators that are the best in the world, from what I've seen, I still have to respect what's happening and just trade the technicals, right? That's what I have to do. I have to be somewhat objective, if not completely objective about it. And right now they're poised, right? So to kind of jump ahead, what I would do in the SPY would be to wait for a break of that high, right, that we saw there on Tuesday, or wait for a break of the low that we saw there on Friday to really start trading it. I think when you're in this mix and you're right near the 409 level, the 408, 409 level we've talked about for so many, I mean, it just goes back and back and back through much of 2022. So this is really not something that is a slam dunk that you start saying, well, you got to start selling here, right? I'm a big bear. I'm an economic bear. I'm a global macro bear. I'm this bear. I'm kind of like in league or sympathy with folks that feel like there's good reasons to be bearish. And I think ultimately the odds still favor the bearish scenario not being completely dead. It seems like they're ignoring the financial situation really well. For now, the SPY and the Qs are not really all that interested, along with the VIX, in the financial saga. And the financials, and this is maybe not the best gauge for them, but they did kind of find a way to come back a little bit there, and they have maybe a little bit working for them. But that rally off of the lows has been unimpressive. It looks a little bit worse, I think, if you take a look at the regional banks here in the form of KRE instead of XLF. So it's down, it's down near some of those lows. Maybe this is forming a base that it will lift from. We can't say yet. I wouldn't rule that out, but it's just, to me, the way that a lot of those stocks have traded and the way this regional bank ETF is traded, it doesn't seem like it's completely out of the danger zone to me. So I'm still a little reluctant to say, oh yeah, all is well. I know Jamie Dimon's trying to sing that tune, from what I gathered over with late week or over the weekend news, but that I saw somewhere. But I don't know. I mean, he clearly knows a lot more about the situation than I do. But wouldn't be the first time we had people, snow us right on from Wall Street, or the banking sector especially. But what is this, right? Is this possibly another for the bears, right? Could this be the start of the right shoulder, where you would see, well, wait a minute, there's a compound inverted head and shoulders that's bullish. Well, we could get a bearish head and shoulders pattern for those that like to follow those forming soon. If this thing treads water and then the earnings start coming out poorly, you could, and the reaction, of course, more importantly, is poor, then you could have a scenario where a kind of like abbreviated right shoulder forms and then it goes lower. But for now, we're working in the here and now. And I would say that you've got to give the bulls their due in the sense that they've got higher highs and higher lows still working. They had a mild pullback after of a really strong push, and they held this 408, 409 for now, which I think remains a big level. I think it's been very sketchy. I mean, I think the volume with which they did this was sketchy. I think the participation was better, and I think some of the breadth really actually deteriorated. So while I'm mentioning that, this is where you have to show pictures. But since this isn't rehearsed, it's not always that easy to remember where I'm planning to go in real time. Let's see if I can just find this for us. I don't think it's that one. No, I want to find my little, there's a little kind of like quick market breadth look that I've got set up somewhere, but I'm clearly not finding it right now. I don't think it's that one. No, it's not that one. All right, let's see where that is. Down here, lower. It seems like Thinkorswim's loading something and taking a little bit longer than it should be. Yeah, absolutely. I know we went through these, but it would be helpful if I could see the picture of these. But for some reason, it cuts me off from that. That is not it. This is not it. I know I left it. I'm pretty sure I should say I left it with the spiders as the one I meant to look at, and that's still not it. And this is it finally. Geez. So what I mean by the market breadth deteriorated is you could see right here that there was this high that we noted that things had improved during their sketchy short squeeze rally on low volume, but things really didn't look all that great in terms of breadth by the end of the week. And that's because it was a lot of engineering that went on. But the problem I think we have now, if we're in that bear camp, is that they've got a lot of the bigger mega caps looking to go. So getting back to our, there it is. So far we've covered the quick recap where things were. We sketchy rally on Friday. Let me bring this over just so we could see it a little bit better. And then we'll get back to it. So we had, I still think financials are not out of the woods because they haven't been able to rally much. Those symbols aren't very interested. We noted the higher highs, higher lows being made off of the bear market downtrend line. Sketchy Fridays, where they use the waft algo, which is what I call it, and then somehow it carries over. But then we did say, right, the job release shifted rate hike probabilities. So we could have a credit crunch with folks, right, regular people. There could be a small business credit crunch. That's going to really put the brakes on things. Let's take a look at that right here, the Fed Watch tool, right? And that's what we're getting at. This a week ago was giving it about a 48% chance that we went up by about 25 basis points at the next meeting. But now they're putting that at 71%. So that's a pretty big, a big step, right? Big change. And that's the part of the issue, I think, is that you've got to, I think there's a lot of good reasons to be bearish. So what I'm going to do is kind of talk about some of these biggest companies right now. We'll come back and finish things out. But I think this macro discussion and then looking inside the market a little bit kind of shows you how they can pull this off. Actually flashing our grid really quickly would help, because this grid, and I've got this as part of our notes for the week, but this grid, you've all seen it before if you've been watching this, typically what we talk about in sector situation, but you can see the communications, they jammed, and despite really not having a great day in the semis because they've gone so strong for so long, they were still able to produce a nice little gain there in tech. So I think the tech and the telecom remain like where they plan to go, it seems, to keep things chugging along in terms of on the bullish side. And you'll see that when we look at some of these names, a lot of them, right, we'll start out with the biggest, which is Apple, which is considered, I guess, right, a tech name. And this looked like it was on its way. I think it was on its way towards this next little shelf down here, but they really reversed that strongly, right? They really reversed that strongly on Friday. To me, again, it was probably on its way to the next support level down. It got really close, I think, to our third target in TNT. It might have gotten within like 10 or 15 cents, I think. But the point is that this was a really strong reversal. And if we look at a little bit more, data, I think it's going to run into some trouble up in here, but could they continue to take this up now that, look, once again, the 10-day in white has acted as support, and that happened right back in here, the rising 10-day back in here, they were able to bring it back above the rising 10-day by the close. And then here you have Wednesday and Thursday, which also rising 10-day saved it. So could this give them another go at it? Maybe. If not, right, if they can't do that though, then you wait for that 10-day. And then if that thing gets taken out, maybe there's more downside. But you would think that there'd be a little bit of weakness on the opening, at least on Monday when we reopen, because look, that jobs number has really, I think, undercut the Fed is done. This is it. That seems like, unless something else happens between now and then, but that really shifted those probabilities. I think Microsoft, look how they used Microsoft to paint the tape, basically, right? This is not uncommon, but I would say the Bulls took control back in a big way with that save on Thursday. Again, I do think Microsoft's approaching overbought. It's certainly outside of its upper Bollinger Band, and it's right near, I think, pretty key resistance. But right, this is still acting well, I guess, off of the AI euphoria, or whatever you want to call it. All that, as our former colleague Ron would always say, they're ballyhooing that, and it's true. I mean, seems like they keep talking about it. But for now, right, I'm not getting in its way until it shows a little bit of a reversal. I wouldn't want to fight against it if they're going to try to find a way to continue to jam this tape up. I think Google, we look at Google, this one, to me, again, this is another one. It's a lot like Microsoft. Is it approaching overbought right now? Yeah. Is it outside of your Bollinger Band? Yeah. Should it probably take a breather, just like Microsoft and Apple? Probably should, right? But they have it acting well. I mean, you're closed at the highest level. I think you have in that's the highest high we've seen and highest close we've seen, it seems like, or near it. Let's put it this way. I think the high is definitely the highest high that we've seen since late last summer. So you can't say that looks really bad, I don't think, and be honest, because it's sort of double bottomed here with a cluster low there and just a single one-off low there. Higher lows get put in, and now it's making higher highs, right? It took out this high, took out that high, and it took this high here, didn't take out that high, but then this high has. So the price action itself doesn't look terrible. And remember now, the Amazon's our next one. Remember that the SPY is those SMAs now are up sloping, and that's an interesting change that happened there just when reviewing the charts. This is, you can see the 150's kind of been in brown has been an issue, got back above there after dropping below it briefly. All that's left here is the 200. I mean, I think in a strong tape, this thing, if they do let this start to move up, I do think the 200 becomes something that it gravitates towards. But this too has higher lows and higher highs at the moment overall. So I don't know if it looks primed at this minute, because it's not like a tremendous breakout, but could it work its way up? I think it could. I don't hate it. I don't think it's as overbought as other ones, like the other bigger ones that we mentioned. Here's Berkshire. Berkshire's looking pretty good, back above all the SMAs. looks like it's ready to maybe go if there's going to be some kind of a goosing, another squeeze leg. NVDA, this is one that I would say doesn't look all that great right now, right? That's got saved here, right above the 20 in blue. We'll see what happens, right? It hasn't cracked its trend yet, so you've got to give it the benefit of the doubt until it does. So, but cracking the 20 would seem to be an issue, especially after the run that it's had. Tesla also sort of similar, I think, after looking at that, but maybe a little bit worse, right? Because the trend isn't really there. Tesla still has interesting patterns in place, but it did lose support last week. It fell below quite a few SMAs, and really only the 100 SMA is waiting for it below. Everything else is now to the north. So Tesla can be a little tough at times too. It looked like a world beater, and then it looks like troubles are brewing. So right now I'd stick with the troubles are brewing until you see it work back above these SMAs, and because it just still has the overall trend down at the moment. But I think that's a tough one to trade at times. At times it's great, but at times it can be tough. Meta, let's take a look at one or two more. Maybe we'll take a look at just a few more, but Meta, right? Look how strongly that finished. We all know that this has, if we scoot out a little bit here, even further, let me get a little more time for us. If we scoot out a little further and look at a little bit of a bigger picture view, it's really fixed. Things have been fixed. I think it's clearly right near the Bollinger, though, right? That's an issue. It's not. It's the Bollinger bands are fairly wide at this point. And it's been kind of relentless, and we've been talking about that, and hopefully that just from the videos, folks were able to see the potential opportunities that had been there for a while, but there's still opportunity there if we go back to bull market mode clearly, or just super squeeze, right? Just bear bull trap, where like, again, we get back to SPY 431 point, whatever it is, and then that maybe ignites the final insane phase of the squeeze that probably gets you near 440 in the SPY. That I just think that's still a scenario. J&J, another really big dog. We could take a look at that one. But what I'm getting at overall, this is a little different here. That big move, I think that's clearly out of control. We'll see what happens with the. Oops. We'll see what happens here with the. Get that out. We'll see what happens here with the earnings coming up. Maybe that'll keep it levitated. I don't know, but it did recover a lot, which I guess that would help in terms of the weightings. UNH, and I've got one or two more that are just, I think, worth taking a look at. UNH, similar, big recovery, probably got too far too fast to the upside and needs to back off. I mean, when you're flashing a 79 on your hourly RSI, then you're pretty darn overbought at that point. So I would be careful there. But again, absent news, I'd be careful. But overall, they fixed that chart a little bit. Some of them look better than others. Visa, too much time here. We don't need all that. Let's get us just an hour. I'm sorry, a year. And if we look at Visa, right, this thing's above all of its SMAs, still kind of has the uptrending complexion overall, and right, it did correct and bounce, so it has what I would say is more of a bullish than bearish candle to finish the week. Again, we'll see, because the jobs data would seemingly not be good, at least initially, for the market. If they shrug it off, they shrug it off. It's just indicative of them using poor sentiment, using poor positioning, using underweighted players, flipping CTAs, the whole routine we've talked about many times. But look, it doesn't look like it's doomed yet. It probably needs to lose the 50 to get itself in trouble. Not that things couldn't reverse. We know that a lot of the things I'm showing here, and I'll end up with this Exxon, but a lot of the things I'm showing are not maybe primed to go, but their charts don't look horrible, and they've moved them back up a lot for whatever that's worth. Like Exxon's not that far really from the high. I mean, even though it had a rough Thursday finish right there, and of course they've been coming after Walmart, and you could see how they've moved that back up, and I think that's looking like it's near some of the best levels it's been. was going to say, in a while, right? It's moving back up sort of towards the higher end of where it's been over the last year. And then I think we'll be getting earnings from our good friends at JP Morgan soon. When's that fall on? So yeah, that's going to fall on 4/14. So we should get a nice little glimpse of that. And then we'll, I guess this at the end of this week. But this is another one that just hasn't looked good now. So this, maybe when we start hearing from these guys, like maybe trouble brews, but Diamond has already said that he thinks we're closer to the end of the banking issue. But that's probably not a good candidate in terms of, anything could happen there. That doesn't really show strength the way that other ones have and holding, but those are just holding. But it's not like those stocks that we went through, the biggest of the big, look like they're perilously about to break below trend or lose critical support, and then we just careen lower from there, right? So that's what I think you have to keep in mind. Let me see if I can just find a few things while we're here. Just a reminder, right? This is the year we're in right here. It's the best year of the presidential cycle. Note that we are in this here, right? We're in the so-called sweet spot until you get to really just about mid-year, but certainly April and May tend to be really good months for the market in this year, this presidential year. So just keep that in mind. This was a reminder from last week about bear market bottoms. This only goes up to a certain point in time. I wish I could find one that's a little bit more updated, probably out there somewhere, and just haven't been able to get my hands on it when I tried to get things together. But you could see that April and May tend to be pretty good in the pre-election year, pre-presidential election year, right? So really until mid-May, things look pretty darn good overall. And remember, they did save the market here early in April. So there's a little swoon, it looks like, that we maybe had. If they start to jam it, right, then this game plan may still be in place, or however you want to describe that, right? So just keep that in mind, because we're not saying that things have to strictly adhere to that. It's just that we have gotten some value, I think, out of following some of these things over the last several years that we've been sharing this type of stuff through the videos. Let's get us back to SPY. So that's, you all kind of get the gist, I think, in terms of that. I still see it, and you could just go with your snapshot if you took a picture earlier of the planned program for this week's sort of stream of consciousness. But I still think they might use I have to be on guard for them to use beats, right? Earnings beats, where they've lowered the bar and then all these wonderful beats happen and people are not positioned right. People don't believe this economy, and they don't believe where prices are in terms of stocks, and they're fighting against it, and that lets them create this earnings beat short squeeze, right? So I'm not predicting that. I'm just saying these are the things that they do. So between the beats, the poor sentiment, the liquidity that some folks are arguing has already made its way in from the Fed supporting the banking system, the seasonality, right, and the bias of this third year in the presidential cycle, and this being two sort of stronger months back to back, that's all being, I think, utilized to move the market higher in some way. And the economic stuff is being ignored. There's a lot of bad stuff that's being ignored. I think that's been made easier just with the sentiment being as poor as it's been, and probably rightfully so. So, and we're also hearing, right, there's going to be more stock buybacks on the way, and that some of these CTAs are going to have to scramble. So we've got that going on. I still think, if you look at my concerns, right, that are not fully priced in, I still think the housing market, durable goods purchases are going to be in trouble because rates are shifting the wrong way. And again, that gets back to the credit crunch I mentioned earlier. The rate at which rates moved up, I don't think that's been fully felt yet. I do think the tighter lending and affordability being crushed just is a big problem. I say it almost every week, but the consumer is supposed to be 2/3 of the U.S. economy, and most of the consumer spending is related to homes and new home purchases, existing home purchases, really the real estate market, which would at least be in what you would have to call a corrective mode, if not worse, maybe. We'll see. And then, of course, the commercial real estate issue is also being ignored for now by the folks that usually ignore everything, that talk to retail folks all the time. That's being ignored for now. But they do. That's what I've mentioned many times. That's what they do. They ignore things. We talked about mega cap. We talked about the big level we're at. We talked about the SMAs curling bullishly. I still think the bull and bear traps are possible. And again, out of the if we get through the weekend without news, I still think they're trying, or they're primed, because of all those big stocks. All those big stocks we looked at, all they really need to do with them is to back them off a little bit, take them out of oversold territory a little bit, and then by the end of the week start slowly moving them back up, and then maybe start using earnings to drive them higher. I am not predicting that. I think this whole move up off the bear market downtrend line has been engineered, and I think it's been done on low volume. But that's why I would remain in the mixed bag baby camp, and I would just wait for lows to be exceeded. You always could have false breakouts and false breakdowns, highs to be exceeded regardless, but you've got that no matter what you do, if you're trading a breakout or breakdown. But until you leave there, and even maybe after for a while, you've got to go for singles and doubles. If they can, the other possibilities clearly, right, they consolidate. But let's just quickly review by getting a little bit more time. So a bigger bull trap could occur, and this has been something I'm sure longtime watchers are tired of me talking about, but I just go back to here. I go back to this high right here, and this is back in August, and you got right below, let's call it 432 on SPY. And I think if you have this big move that you leave the bear market downtrend line, which is the pink line there, and you manage to get back above there, hold above there and go, and then you start taking out highs, what's really going to seal it for a lot of people that will say, I think, oh, the price action is telling you you're in a new bull market, as unlikely as that seems at the moment, right? That's when I think you're going to get more kind of like technical capitulation. And I understand that. I think watching the price action and is to me is, the most important things. But remember, these guys are very crafty, and nothing would probably fool the final holdouts more than taking out yet another big structural high that was made on the way down, and especially closing above there. And I do think they could even produce a squeeze that gets you up towards here, right towards the upper 430s, just below, maybe right to 440 from that point, because a lot of people would probably say, oh, geez, like this thing's really going, and it would fly in the face of a lot of things, and it might be the right course of action by bulls in the end. And my concerns may be unfounded or overblown, right? But I still am waiting for that. I'd rather, if there's going to be a 4.5 to 5 years of bull market time left, the way that they typically have been, not that they have to be that way, but if that's going to happen again, we'll have plenty of time to play the long side aggressively. I don't need to do it on day one of when I'm ready to capitulate, that I'm suddenly, huge as a bull. But that's clearly the bull trap that could occur that I've been talking about. And of course, you can't rule out another bear trap as well, right? You could have earnings come down. They could find support again, despite poor earnings, find support near the lower 380s, and then go from there. But what we should do probably is just wrap up on just some other technicals. We talked about all the main points we made in our PowerPoint. I think the QQQs, they're the only thing I think that hurts them right now is that things are a little overbought. I do think that the SMH is a little overdone still, but again, I don't want to pick a fight with this thing quite yet. It's above every SMA, and they're all rising practically at this point. So, right, that's a bullish complexion, at least a superficially bullish complexion, even if we don't believe it or we're not true believers. But look, here's the big push, corrective action, breakout and go, and they're holding above everything. So this would potentially still have a chance, right? And it won't be hard to imagine what they're going to throw at us in terms of spin. Well, with all the naysayers out there, these Apple just keeps on producing. Microsoft just continues to execute, and you'll have the windsock will be on TV, singing the praises of a lot of things he told people to avoid and all that stuff, and he'll be flip-flopping. I think you all know who I'm talking about. But bottom line is, right, that's when you probably want to be as skeptical as possible and ready to sell when they're all celebrating, when they've got, their baseball caps on. Hey, this is all great. But diamonds, I think they were a little subdued versus other things, but they did still manage to hold above all the SMAs. We could probably take this line. I probably should take this line and bring it over at this point. It just shows you, right, they're on the doorstep, I think, of possibly taking out resistance. It wouldn't take much. So they would be similar to the Qs in the sense, big rise, long corrective phase to that rise, and then they start to go again in the face of everything, all things good. But this is why we do what we do, right? So we're not caught off guard by things that don't make sense. IWM continues to be the big problem because, and it sort of speaks, this action, I think, speaks to what we've been seeing in terms of smaller companies needing loans, and basically those loans not being as easy to come by, and the terms of those loans not being nearly as good as they have been. So this remains challenged to this point. It's even really below this, I would say, this corrective channels support that I just highlighted right there. So if we extend a few things, which I'm not going to bother with, but I think you could see the SMAs are not looking anywhere near like they are in the Qs and SPYs. So yeah, I think you need to give this its time to really become a true believer. But this is a really good trader, and we use this a lot because it is a good trader. There's great liquidity in here in terms of the options, and it moves. It moves around, and it's very it's got a great book for you to make adjustments in, and making adjustments like a champ in this market is really where it's at, because it's just not been easy. Again, much like 2022 hasn't been easy, maybe even a little harder than 2022 so far, because at least we had some really big downdrafts and we had some really strong updrafts, but we've had a lot of movement so far this year, but it hasn't been sustained for very long. It meant during many times, just the way it is. But so this one's a little more challenged, and that sort of speaks to things. I don't really want to talk too much about dollar and all the rest of it. I'll wrap up on that, but dollar and TNX. But look, the dollars, there's all kinds of stuff happening there. So, the dollar's not acting well. It does have a chance to support near recent lows. We'll see it if it does, but you can just see the trend changed on that. This was extremely overbought on many time frames. We talked about that. So that really wasn't a shocker that it started to correct from there. The fact that it corrected so much has probably been the bigger thing, but you can see why the fundamentals, with everything happening with the petrodollar and this brick and the BRICS and all this stuff. I mean, this is, and well, the government devaluing all the dollars that we hold through the Fed, basically, right, quasi-governmental or whatever. But anyway, here's your yield. Yields are coming down still on the 10-year, and so they're where they are now. But I guess it's starting to become obvious to people that maybe they want to be safe for a lot of reasons, and they're bidding up bonds, and the yields are coming off as a result. Could be more money moving that way, and it could be the anticipation maybe that rates are going to peak soon and then go down. And then finally, we'll take a look at the VIX, and then we'll wrap it up, because the VIX, right, this is now at a great level, right? We're back to a great level. I'm going to personally be doing stuff. I know Ryan will. I'm going to be positioning myself with taking advantage if this gets even a little bit lower too, of this, to position for some downside protection. And then in different forms, Ryan covers all kinds of things, some occasionally during webinars for some services, but then really during the Phoenix portfolio. And there's a lot of ways you can do things, and we like to do things in certain ways, and kind of just positioning yourself. I don't usually buy that much ahead of time, but I decided to step up and buy some low dollar risk positions in different things, using some techniques. And my plan is to get more aggressive with very short-term options when the time comes. So that might be something you can discuss or, raise with Ryan for if you're in the Phoenix portfolio service. But that's how we're going about it this time. We've got a couple of different reasons for that. Don't want to go into all those. But yeah, I think now, bottom line is why I brought this up is that, look, you're near, maybe not at, but you are near levels that we haven't seen for very often, because the last several years in this world have just been crazy, right? They've just been crazy times to live through. And the last couple years, going back to 22, you really don't see things far lower for the most part until you go back to the second half of 2021. After all the money was juiced into the economy and it started rippling out from there. But that to me is an opportunity. So I still think it could go a little bit lower if they manage to put this seasonality rally together and use the EPS beats and all that. But I'm not really going to worry about it. If they do move things up, I've got adjustments already planned and in my mind for what I'll do with my hedges. So I'm not really sweating it if they do, but I'm not buying my full number yet either at the same time. So I'm just kind of partialing my way in. Ryan's partialing his way in. And we just wanted to share that because we think with the VIX down here and a lot of options back on the cheaper side that are longer dated, as a result, in some ways, right? Not perfectly, but in some ways, it's a good time to do that. So I hope something I share with you helps you out this week or in the future. Another really tough one. Try to shorten it up a little bit because there's just so many things to cover. But thanks for tuning in. I'll see everybody through updates. Stay nimble out there and everyone have themselves a great holiday weekend. Thanks for tuning in.